Hi, I'm Devin Shute, and welcome to the last Money Minute for 2023. Now, when we were ending off the year last year, we were struggling to come out of a pandemic, we were dealing with the Ukraine invasion, there was a global spike in inflation, and markets had really been quite lackluster in 2022. So going into this year, there was optimism that things were going to be far better. Looking back at the year, unfortunately, this did not fully live up to our positive expectations. The roller coaster of market volatility continued, and we still had to contend with inflation that was stickier than expected. Interest rates remained higher for longer, and we had a further conflict breakout in the Middle East. There were some bright spots in the financial markets, particularly from the Magnificent Seven, and this was a group of US tech companies that had enjoyed enormous interest on the back of the AI trend. Companies like Apple, Alphabet, and Microsoft had led the US markets higher for most of the year, while other areas of the markets languished. Now, our investors have enjoyed exposure to these current high-flying stocks, but we continue to maintain a high level of diversification to manage risk. A further theme that dictated market direction this year was around China. Now, the second biggest economy did relax their stringent COVID shutdown measures, and so they were expected to have a better year. Unfortunately, their growth rate, although it was still reasonable, their financial markets did lag. The government understands that they do need to maintain this growth, and so they've started to stimulate the economy and become more investor-friendly. Turning to South Africa this year, we all know how economies struggled in 2023, and this was a combination of energy shortages, a logistics crisis, and a corruption problem that we just can't seem to shake. Now, couple this with an upcoming national election early next year, it's no wonder that our markets remain volatile. That being said, we're seeing unprecedented private sector investment in these sectors to overcome state failure, and this bodes well for significant economic growth in the future as that plays out. So in summary, for 2023, although markets maybe didn't perform as well as some of us had expected at the start of the year, investors did manage to generate positive returns in a year filled with difficult events to navigate. Now, while the future will always remain uncertain, investors continue to remain well served by investing in portfolios that are well diversified and high in quality. From me and the team, we wish you and your families a blessed festive season. Thanks for watching. Have a great Christmas.